Hello friends, welcome to JK Shah classes, a Vedanta Enterprise. First chapter which we are going to discuss today is basic concepts and tax rates, primarily tax rates for AY 25-26. For tax rates, we divide assessee into various categories. First category is individual HUF, AOP, BOI and artificial juridical person. Then company, partnership firm, local authority, etc. So individual HUFs, AOP, BOI and artificial juridical person, these people, when we talk about a tax rate on the regular income, they are divided into two categories: old tax regime, new tax regime. AY 24-25, last year, the new tax regime of section 115 BAC was made by default. So if these people do not make any choice, then by default new tax regime of section 115 BAC subsection 1A will be automatically be applicable from last year onwards. And in case they want to shift to the old tax regime, then there is one option available whereby they can select old tax regime. Old tax regime would mean normal tax rate where the basic exemption is 2.5 lakh. Okay, now starting with this, briefly recapitulating this. So tax rates for AY 25-26, but right now we are discussing about tax rates on the regular income, normal income. If the assessee has any special income like winning from lottery, long-term capital gain, etc., then those incomes will be taxable at special rate, for which we have a separate chapter also. So right now, first possibility is section 115 BAC new tax regime. Here, all 5 people, this is to be called as default option or default tax regime also. First 3 lakh is the basic exemption, no tax on the first 3 lakhs. Next 3 lakh to 7 lakhs. 3 lakh to 7 lakh, up till AY 24-25 it was 3 lakhs to 6 lakhs, but instead of 3 to 6, whatever is written in bold italics, that is the amendment. Now next 4 lakhs will be taxed at 5%. Next 3 lakh, that is 7 lakh to 10 lakh will be taxed at 10%. And 10 lakh to 12 lakhs, next 2 lakhs will be taxed at 15%. Be careful about it here. Upper limit 10 lakh to 12 lakhs. Earlier last year it was 9 lakh to 12, now it is 10 to 12. Next 2 lakhs. So first 3 lakhs, then 4 lakhs, then 3 lakhs, then next 2 lakhs will be taxed at 15% rate. And 12 to 15 will be taxed at 20% rate. 25% slab is removed now. There is no 25% slab. Straight away balance will be at 30% rate. Above 15 lakh will be taxed at 30% rate. Of course, after calculating tax, assessee, if he is individual and is resident, then he will be entitled to rebate under section 87A. Rebate is a discount from tax. However, rebate is allowed only to resident individuals, not allowed to remaining 4 people. In this category, we are discussing tax rates for HUF also, AOP, BOI also and AJP also. Before we proceed further, small clarification here, it should be AOP other than cooperative society. If the association of person is cooperative society, then we have separate provisions applicable to cooperative society. So right now, individual HUF, AOP, BOI, but other than cooperative society and AJP. Surcharge will also come, health and education cess will also come. Rebate under section 87A out of these 5 people is available only to resident individual, provided his net income taxable here does not exceed 7 lakh rupees. Now under 115 BAC subsection 1A new regime or default regime, if the income, that is net income, is up to 7 lakhs, then rebate will be either 100% of tax or 25,000, whichever is lower. The tax amount to be considered here is before surcharge and before health and education cess. Surcharge comes later. And in case if the net income exceeds 7 lakhs, then also rebate is available, but formula based. Then rebate amount will not be full amount of tax. How to calculate rebate when the net income exceeds 7 lakhs? Remember, rebate available only to resident individuals. Others cannot claim this rebate. If the net income exceeds 7 lakh rupees, then rebate will be left hand side bracket minus right hand side bracket. Left hand side bracket would mean total tax payable. Tax payable, of course, without health and education cess, without surcharge, minus amount of net income exceeding 7 lakhs. That means total income minus 7 lakhs. Suppose my total income is 7 lakh 10,000 So I am not entitled under point A, but point B will still give me rebate minus 7 lakh. That means my income exceeding 7 lakh is 10,000 and my tax payable is more than 10,000, then I will get rebate to the tune of 10,000. I will get rebate to the tune of that much amount. Suppose any tax works out to be hypothetically 23,000. Then in such situation, my rebate will be 23 minus 10,000, my rebate will be 13,000. Simply, in other words, tax payable will be 23,000 minus this rebate 13,000, my tax payable will be 10,000. Of course, plus health and education says, simple language, tax payable will be restricted to the amount of income exceeding 7 lakh rupees. But rebate will be available to individuals who are resident in India. In case opting out of 115 BAC subsection 1A and opting for old tax regime, then under old tax regime, which is also called as optional tax regime, new tax regime is called default tax regime, old tax regime will be called as optional tax regime. Then the rate of tax are applicable slab wise. These people are taxed as per slab rate. First 2.5 lakh rupees is the basic exemption. For all 5 of them combined together, individual HUF, AOP, BOI, AJP, first 2.5 lakh no tax, basic exemption. Next 2.5 lakh will be taxed at 5% rate. Next 5 lakh will be taxed at 20% rate straight away, plus 12,500 for the earlier slab. And in case if the income is more than 10 lakh, then on first 10 lakh rupees tax will be 1,12,500 plus 30% of the income exceeding 10 lakhs. Income exceeding 10 lakhs will be taxed at 30% flat rate. This is for all 5 of them. However, out of these 5, if the assessee is individual and he is resident and he is senior citizen, 3 conditions: he is individual plus resident plus senior citizen, that means he is 60 years and above, then basic exemption limit will be 3 lakhs instead of 2.5 lakh. First 3 lakhs no tax, next 2 lakhs, that means 3 lakh to 5 lakhs will be taxed at 5% rate. In case if the income is above 5 lakhs, then the same as individuals in the earlier table, it will be taxed at 20% rate. So 5 lakh to 10 lakh, next 5 lakh will be taxed at 20% rate plus 10,000 tax for the first 5 lakh. In case if the amount exceeds or net income exceeds 10 lakh rupees, then first 10 lakh rupees tax will be 1,10,000 plus 30% of the income exceeding 10 lakhs. This is applicable only for resident individual who is 60 years and above. Now, when does he turn 60 years or more? He should be 60 years or more at any time during the previous year. So, we have CBDT circular of 2016 clarifying that if the person was born on 1st April 1965, then in which year will he turn 60 years of age or which date? So ideally he should turn 60 years of age on 1st April 2025, that is next year, financial year 25-26 logically. But CBDT issued a circular based on Supreme Court decision under some other law stating that he will not turn 60 years of age on 1st April 25, he will turn 60 years of age one day before that at 12 o'clock midnight on 31st March 2025. If it is 31st March 25, then it will be financial year 24-25, AY 25-26. In this year also, because of that one day, he will get benefit of higher basic exemption. Instead of 60 years, if he is 80 years and above, he is individual plus resident plus is 80 years and above, we call them as very senior citizen or super senior citizen. Then basic exemption limit will be 5 lakhs. First 5 lakhs no tax, next 5 lakh. Now here 5% slab will not come only because basic exemption is 5 lakh. First 5 lakh no tax, next 5 lakh tax will be 20% and above 10 lakh rupees of income tax will be 1 lakh rupee for the first 10 lakhs and 30% of the income exceeding 10 lakh. If income is 12 lakh rupees, first 10 lakh will be 1 lakh rupee and remaining 2 lakh will be taxed at 30%. Here also rebate will be available, but here with a slightly different condition. Rebate is available in any case only to resident individuals, not available to HUF, AOP, BOI or AJP. So out of 3 types of table that we discussed, first table was for all 5. But as far as individuals are concerned, here it will be to a young person like you and me, resident individual who is below 60 years, as well as non-resident individual irrespective of age. Second table is applicable only to resident individual who is 60 years and above. Third table is applicable with 5 lakh basic exemption only to resident individual who is 80 years and above. Here also under old tax regime rebate is available, but here with a slightly different condition. Under new tax regime rebate is available if the net income is up to 7 lakhs. Above 7 lakhs also available, formula based, but ideally rebate under 87A under new scheme is available if the net income is up to 7 lakh. Here rebate is available under old scheme if the net income is up to 5 lakh. Up to 5 lakh rupees, again let me clarify, available only to resident individual, not available to HUF or AOPBY. 100% tax or 12,500, whichever is lower will be the amount of rebate. Then if rebate is not applicable, if the income is above 50 lakhs, above 1 crore, above 2 crore, then surcharge will be applicable. There are 5 slabs of surcharge or 5 rates of surcharge. If the net income is up to 50 lakhs, then no surcharge. This we are talking about 5 people, individual, HUF, AOP, BOI and AJP. If the net income is up to 50 lakh rupees, net income including special incomes, including regular income. Up to 50 lakhs, no surcharge. Net income is more than 50 lakh but up to 1 crore, then surcharge rate will be 10%. If the net income is above 1 crore but up to 2 crore, then surcharge rate will be 15%. If the net income is above 2 crore but up to 5 crore, then surcharge rate will be 25%, and if the net income is above 5 crore, then surcharge rate will be 37%. If you are super rich, then you pay higher rate of surcharge. However, Plus Health and Education says, however, out of these 5 slabs of surcharges, there are 4 exceptional points with regards to surcharge, which is important from exam perspective. If the person is individual HUF, AOP, BOI, AJP and his income is computed under new tax regime, then one benefit is given under 115 BAC subsection 1A that surcharge rate shall not exceed 25%. Shall not exceed 25% means surcharge could be either 0, 10, 15 or 25. 37% will not apply under new tax regime. Second, no surcharge to an assessee which is specified fund referred to in section 10(4)(d). What is specified fund? That we had discussed in chapter 12, upcoming chapter, which we will be discussing. On incomes referred to in section 115AD, covered by 115AD, read with 10(4)(d). Now, as far as specified fund is concerned, it is a fund incorporated in India with having investors resident of outside India. Fund is incorporated in India and the unit holders or the investors are resident of country outside India. Most of the incomes are exempt under 10(4)(d) by virtue of capital gain. Some incomes are taxable as per 115AD section. Whatever is taxable will not attract any surcharge. Next is AOP, Association of Person, which has only companies as its members. Then surcharge rate will not be 0, 10, 15, 25, 37. Surcharge rate will be either 0, 10 or 15. Shall not exceed 15%, meaning thereby it could be 0%, 10% or 15%. Then last point, 5 incomes will not have this higher surcharge of 25% and 37%. 5 incomes will have surcharge rate restricted to 15%. These 5 incomes you need to remember. Number 1, 2 types of long-term capital gain. Either long-term capital gains covered by section 112A. If you know this is taxable or was taxable at 10% rate, from 23rd July 2024 onwards, it is taxable at 12.5%. Right now, we are not discussing tax rates here, we are discussing surcharge. Surcharge rate on this shall not exceed 15%, meaning thereby 37% and 25% will not apply, restricted to 15%. Then other long-term capital gain or normal long-term capital gain. I call this as special long-term capital gain, applicable on 3 assets: units of business trust, units of equity oriented fund and equity share. If it is normal long-term capital gain, then the section number is 112, which was taxable at 20% till 22nd July 24. Now from 23rd July 2024, it is taxable at 12.5%. Here surcharge will be not exceeding 15%. means 25% and 37% will not apply. Here for 112A, first 1.25 lakh is not taxable. Here the limit is enhanced from 1 lakh rupees to 1.25 lakh from the beginning of the current year. Then the third income is special short-term capital gain covered by section 111A, which was taxable at 15% rate. Now from 23rd July it will be taxed at 20% rate. Here also surcharge shall not exceed 15%. Then three types of capital gain. Thereafter there is income called dividend. Dividend income which is taxable at normal rate. There is no special section or special rate, taxable as per normal slab rate. Here also surcharge shall not exceed 15%. And last income, which you may not understand right now, which we will be discussing in upcoming chapter, chapter 12, special rates of tax, incomes covered by section 115AD. 115AD subsection 1 clause B. This is applicable to FPI, foreign portfolio investor. For these 5 incomes, surcharge rate shall be restricted to 15%. Okay. Plus health and education says, and thereafter refer to AMT chapter, alternate minimum tax chapter. Apart from regular tax, one has to apply AMT also, which we will be discussing in AMT chapter. Next is tax rate applicable to companies. Companies are divided into two categories: Indian company, which is called domestic company, and the second one is foreign company. For foreign company, the tax rate applicable was 40% last year. This year, AY 25-26 onwards, it is brought down to 35%. And for Indian company, there are two concepts. One is special schemes and other is normal. The normal tax rate applicable to Indian company is either 30% or 25% depending upon fulfillment of one condition. Under special scheme, not 115 BAC but under 115 BAA or 115 BAB. Under 115 BAA, tax rate will be 22%, and under 115 BAB, tax rate for manufacturing company will be 15% for Indian company. Such special schemes do not apply to foreign company. Foreign company only one rate, 35%. But let me remind you, we are discussing about tax rates on normal income. If assessee has any special income like capital gain, etc., then will be taxable at a special rate. Okay, what are the normal rates? Normal rates is 30% for Indian company, but instead of 30%, tax rate will be 25%. When will it be 25%? If the turnover 2 years back means current year applicable to is financial year 24-25. 2 years back it must have been financial year 22-23. If turnover of 2 years back financial year 22-23, which will be given in the exam, is up to 400 crore, then current year tax rate will be 25%. 2 years back turnover was up to 400 crore, current year tax rate 25%. And in any other case, normal tax rate 30%. But if company has opted for 115 BAA, then 22%, 115 BAB, then 15%. However, these two tax rates, which we will be discussing at length in upcoming chapter, will be subjected to compulsory surcharge at the rate of 10%. Surcharge will be compulsory. In case if it is foreign company, then tax rate shall now be 35%, change from 40% to 35% with effect from AY 25-26. What are the surcharge rates for companies? Surcharge rate for company which has opted for 115 BAA or BAB will be 10% flat, irrespective of anything. Otherwise, for surcharge rate, there are 3 slabs for Indian companies, and surcharge rate for foreign companies again 3 slabs. Indian company 0%, 7%, 12%, foreign company 0%, 2%, 5%. When is 0% applicable? If the net income is up to, income means net income is up to 1 crore, surcharge rate will be 0 for both the types of company. If the net income exceeds 1 crore but up to 10 crore, then surcharge rate for Indian company 7% of tax, and for foreign company 2% of tax. And in case if the net income exceeds 10 crore, then surcharge rate for Indian company will be 12%, whereas for foreign company it will be 5%. This you need to remember thoroughly, because in exam most of the questions are on companies. So you need to be very thorough with the surcharge rate. Now whether company has opted for 115 BAA or BAB or not, that would be clarified in the question. If not clarified, you need to write your suitable assumption. Plus health and education says 4% of tax plus surcharge, and then apply minimum alternate tax. Compare with that. Rate of minimum alternate tax is 15% of book profit on each and every income. Here these tax rates are for normal income. These are for normal income, special rate. But when it comes to math chapter, each and every income, whether normal income or special income, will be taxed at 15%. For partnership firm and LLP, firm includes LLP also, tax rate is flat 30%. Plus surcharge will be attracted either 0% if the net income is up to 1 crore. If the net income exceeds 1 crore, then surcharge will be 12%. 0 or 12, only two possibility. Unlike companies where there are three slabs, 0, 7 and 12. So for companies you will have to find out whether income is exceeding 10 crore or not, because surcharge rate will change with more than 10 crore income. However, for partnership firms and LLP, it doesn't matter. If income is exceeding 1 crore, then surcharge will be attracted. Same way for local authorities. Local authority as in municipality, here most of the incomes are exempt under section 10 clause 20, but whatever income is taxable will be taxed at a flat rate of 30%, plus surcharge rate will be same like partnership firm and LLP, 12% of tax if the income exceeds 1 crore, plus health and education says 4%. For both of them we will have to also compare with alternate minimum tax. For companies we say minimum alternate tax, similarly for other than companies it is AMT. Next is rate of tax applicable to cooperative society. For cooperative society there are two slabs or two types of tax rates. One is normal tax rate and the second is special tax rate given in section 115 BAD BAE. 115 BAD means 22% tax rate similar to domestic company 115 BAA, and 115 BAE is 15% tax rate for manufacturing cooperative society. That is cooperative society which is resident plus engaged in manufacturing activity. For a normal cooperative society other than these two, opting for 115 BAD or BAE, the tax rate will be as per slab. 10,000, 10,000, above 20,000. First 10,000 tax rate with no basic exemption. First 10,000 will be taxed at 10% rate. Next 10,000 will be taxed at 20% rate for the first 1,000, for the first 10,000. And if the net income exceeds 20,000, the tax rate will be 30% on the income exceeding first 20,000. First 10,000 at the rate of 10% will be 1,000. Next 10,000 will be at the rate of 20%, 2,000. Total is 3,000. So if the income is more than 20,000, then first 20,000 tax will be 3,000 and then 30% of the income exceeding first 20,000. Plus surcharge plus health and education cess. Surcharge rate, earlier it was just like individual HUF, it was 0, 10, 15%, 25%, 37%. Now since past couple of years is being changed, AY 23-24, surcharge rate will be just like domestic company 7% and 12% depending upon net income. Net income is up to 1 crore, no surcharge. More than 1 crore up to 10 crore, then 7%, and in case if the net income is more than 10 crore, then surcharge rate will be 12%. Plus health and education cess and also alternate minimum tax. However, if the cooperative society is resident and has opted for 115 BAD, then the tax rate will be 22% plus compulsory surcharge at the rate of 10% plus health and education cess. And in case it is manufacturing cooperative society and opting for 115 BAE. For 115 BAD and BAE, it should be a resident cooperative society. Non-resident cooperative society cannot opt for these two sections. Then tax rate will be 15% plus compulsory surcharge of 10% plus health and education cess 4%. Plus AMT chapter will not apply to these cooperative society. They are being exempted from applicability of alternate minimum tax. Okay. These were the tax rates applicable on normal income. Now, as we discussed earlier, the incomes are to be divided into two parts. Normal income on which normal tax rates will apply, and on some special incomes for which we have a separate provision, special incomes will be taxed at special rate. These special rates are given in Income Tax Act in upcoming chapter 12. Please do refer to the video of chapter 12, special rates of tax. Whatever tax rates that we discuss were applicable on normal income, slab rate or whatever. We discussed for individual HUF, AOP, BOI and AJP, company, Indian company, foreign company, partnership firm, local authority, cooperative society. Assessees are divided into these categories. Anybody who is not covered here will be artificial juridical person. Slab rate will be applicable under new tax scheme or old tax scheme. Okay, now the next title is tax rate on some special incomes. Now special incomes we will be discussing once again in upcoming chapter. First is normal LTCGs covered by section 112. Tax rate till last year was 20%. Even in current year also, if asset is transferred up to 22nd July 2024, then the tax rate was 20% with indexation. However, indexation benefit is completely removed subject to some exception by Nirmala Sitharamanji if the asset is transferred on or after 23rd July 2024, that is the date of announcement of budget. If transferred on or before 22nd July, that is up to 22nd July 24, then the tax rate will be 20% with indexation. But if transferred on or after 23rd July, then without indexation tax rate will be 12.5%. This is normal LTCG. If assessee has special LTCG covered by section 112A, that is LTCG arising on transfer of any of the following three assets: equity shares of a company, units of equity oriented fund or units of business trust, then exceeding first 1.25 lakh. Till last year it was exceeding 1 lakh. Then exceeding first 1,25,000. First 1,25,000 will not be taxed. Exceeding 1,25,000, if transferred up to 22nd July 24, then would be taxed at 10% rate. If transferred on or after 23rd July, then will be taxable at 12.5% without indexation. Indexation is not allowed otherwise also under section 112A. Earlier also not allowed, now also not allowed. However, what amendment has been made? Understand, tax rates here are changed, are increased from 10% to 12.5% with effect from 23rd July if transferred on or after 23rd July. But the threshold limit of 1 lakh is increased to 1.25 lakh from the beginning of the current year. It is not 1.25 lakhs from 23rd July. 1.25 lakhs is introduced from 1st April 24. Naturally, government cannot increase the limit or give extra 25,000 from 23rd July. It will lead to lot of confusion and then government will have to issue lot of clarification. So remember, limit, the threshold limit is enhanced or increased from 1 lakh to 1,25,000 from the beginning of the current year. Only the tax rates are changed from 23rd July. So following changes have been made in section 111A and 112A with effect from 23rd July. But before that, let's check 111A. 111A is a short-term capital gain, special short-term capital gain on transfer of same assets. Which three assets? Equity shares of a company, units of equity oriented fund, units of business trust. Indexation is not possible, it is short-term. On the three assets covered by section 111A, tax rate till last year was 15%. Current year, either 15% if transferred up to 22nd July 2024 or 20%. Rate here is increased from 15% to 20% if transferred on or after 23rd July. 15% of course plus surcharge plus health and education cess wherever applicable if transferred up to 22nd July. This is the tax rate on special short-term capital gain. Now what changes have been made in these two sections, and these are important changes. So I have tabularized them for the sake of your benefit. Quickly have a look at it. 111A and 112A. 112A is long term, 111A is short term. Rate of tax up to 22nd July 24 it was 15%, 23rd July onwards. If transferred on or after 23rd July, then tax rate is increased to 20%. I have colored also, so you can easily, it becomes noticeable. For long term, if the asset is transferred up to 22nd July 24, 10%, and if transferred on or after 23rd July 24, then 12.5%. However, the threshold limit is increased to 1,25,000 not only from 23rd July, it is increased from 1st April. Therefore, the threshold limit will be 1,25,000 from the beginning of the year. This exemption limit or threshold limit is not applicable for short-term capital gain. Rebate under section 87A is available against tax on short-term capital gain covered by 111A. Rebate under 87A is not available against tax on 112A. This is the only income, the tax on which is not eligible for rebate under section 87A. First of all, rebate under 87A is only for resident individuals, but not available against this particular tax. Concept of grandfathering which was introduced in 2018 will continue to be applicable even after changes. Even if tax rate is enhanced to 12.5%, then also here for 112A, grandfathering of cost of acquisition given in section 55 subsection 2 clause AC will continue to be applicable. Okay. Then if you recollect, we had discussed that the tax rates, if you ask a question where are these tax rates given, so some of the tax rates are given in the Income Tax Act itself, and whatever tax rates that we discuss, our basic exemption 3 lakh, for partnership firm 30%, Indian company 30% or 25%, foreign company 35%. Where is it given? It is given in Finance Act. Finance Act, that means budget. For you, Finance Act 2024 is applicable. When you are giving your attempt, at that time Finance Act 25 also must have been already announced, but that is not applicable for May 25 and November 25 attempt. That will be applicable for May 26 and November 26 attempt. Some rates are given in Finance Act, what we discussed here right now, and some tax rates are given in Income Tax Act. So in Income Tax Act, we have a separate chapter called Chapter 12, Special Rates of Tax, where we will be discussing Chapter 12 and Chapter 12A, where we will be discussing all these tax rates which are given in Income Tax Act, like Section 115A, AB, AC, ACA, 115AD, 115B, BAA, 22% tax rate for company, BAB, 15% tax rate for company, BAC for individual HUF, AOP, BOI, BAD for resident cooperative society, BAE, 15% tax rate for resident cooperative society, 115BB, my favorite section, which is for winning incomes taxable at 30%, etc. And last point here is that cost inflation index number, CIR number, for indexation purpose for current year 24-25, AY 25-26 is 363. However, indexation is stopped. From 23rd July 24. Up to 22nd July 24, indexation was allowable. Therefore, index number will be playing a role. This chapter is over. See you in the next video with the next chapter.